Hi, this is Kim Watson of Easy Trader. Welcome to what should have been a midweek review of the markets, but is now turned into a Thursday review. So we'll be looking at the rest of the month at this point. Before I look at the technicals themselves, just wanted to cover a subject we covered in our trading room yesterday on adding into positions. Quite often traders will do their best to actually get out of a position quite quickly or take profits quite quickly, and it's something we sometimes encourage people to do because of targets are being hit or partial targets are being hit, and it seems like a logical place to ensure that the trade has got some money locked in and it becomes a profitable or a situation where you're going to lose little or nothing at all or guarantee to make money. So we will take profits out at points. But there are times when you're in a trade, and let's just say, ignore the time frame. This is a daily chart, but ignore the time frame and ignore the scale here because I'm not going to refer to the scale at all. But let's assume you've got a bit of a target in mind of this 50 moving average here, and you're pretty certain that there's a chance of it getting down there. Now let's say you had a sell signal at the top here, and you went in here at £1 a point. Now I'm going to just keep this simple. Sorry, if you're in dollars, you can think about it in dollars or contracts. You can go and think of it that way. But let's just keep it simple. £1 a point. Now let's assume that you're adamant it's going to get down here in your analysis. You can see it's weak. The figures have come out. You've already seen quite a nice sell-off here, which is confirmed. You're in profit. Let's just say you're in 20 points of profit at this point for the sake of things here, and you're deciding, well, if it breaks that 21 moving average there, I'm going to add in, and it does. So you add in, but at this point you add in at £2, and you decide that, well, I don't want to put too much risk on that, so I'm going to put a risk it there at 10 pips. So you put yourself a 10 pip stop on there. Now the problem is here, because you've effectively pyramided the price, you've gone in at 1 and then 2, you're now at £3 a point. But you're the wrong side up effectively in my book, because you've increased by a bigger number at this point here. So it doesn't need to come back. It needs to come back 7 pips, and you're at break even. Your break even point has dropped. Instead of being, let's just assume you went in at 1 and 1, your break even point's bang in the middle there at 10. But if you're going in at 1 and 2, your break-even point is dropping, so you're effectively increasing the risk of your trade. So if I was wrong here and it broke that 21 but then bounced, I would certainly be losing £20 on that second entry, the add-in. My first entry then would be it would be still possibly making £8 or £9 if it's broken at level. It's probably less. Overall, I'm going to be at £10 down, even if I close at that point. But I wouldn't be closing at that point because I would be determined that I'm going to be trading down to this level. So at that stage, I'll be leaving the stop in here. So the thing is, the point is that the risk, you're increasing your risk significantly by adding in a bigger sum. If you were to have, as I said a moment ago, added in at a 1 and 1, so there's different ways of loading a position. You can load it so you've got the bigger position and then the smaller position, which is fine. And in this situation, by that stage, if we did the same thing, by the time it's got down to, if you're 20 pips up, you're actually £40 up at that point when you're adding in by a pound. So that pound at 10 pips, if it did go wrong, okay, you've got the reduction in profit from this first place, but that second entry is only taking £10 off your overall profit situation, and let's say you're up 8 points still at that point, you're still £16 up. If you decided, well, actually this trade's wrong, you close at 16 pounds up, you're profitable. So you've turned what would have been by doing it this way, a loss-making position. By putting it in this way, you're still profitable. So your trade, your analysis was right. That's fine in the initial place, and you're gaining something from good initial analysis. Now, of course, we can get bounces at any point in these markets, and it can just take us out. Now, the third way of entering is on more of a ladder principle. So you go in at 1, you add 1, and you add 1 later on, for example. So as it's going more and more in your favour, you're adding positions in. Well, of course, then it's a very balanced, very flat line, effectively, risk in a sense, because you've got no heavy loading at the bottom levels. It's even. This is ideal, and there are different ways of getting into this situation. It may be that you're taking your first position here and adding in. Let's assume you're playing the retrace, and there was part of that retrace there was a initial point of resistance, so you actually went in then, but for one unit, £1. But really, ideal point was up here, where you can add £2 there, so you can add it the other way around. So you can still get into this situation. So you're into an overall position, assuming that you're confident that at that point it's going to turn around. But even so, if it carries on to lose, it's not going to be losing as much as going the other way around at 2 and 1. So if you went in 2 originally, then adding in 1, you're going to be adding in the wrong. You've unloaded it. You've loaded it the wrong way, effectively. You should be loading it slightly bigger. But of course, you don't do this sort of situation when you're in a bad trade. It's just where you're in a trade where this is where my ideal entry, but there is resistance at this point. I'll take a initial loading point here. Now, if I can't get any more in because it doesn't come up there, that's fine. I'm in a smaller position, but I'm in the trade. If I just waited for here and never got there, I'm not in the trade at all. And then it's sort of, well, you've missed a good opportunity. So this is another proper way of doing it. As I say, it's not a case of when the trade starts running against you, you just start increasing the size, hoping that you'll get right, because when it does retrace, you'll be okay. I've seen people do this and blow accounts very, very quickly. It's a case of this is the ideal entry, but this is a possible entry. So you add a little bit here, add the rest of the position that you want to add there. And then when it gets to the next levels, if you've gone 2-1, you may want to add half, or you may want to add another 1 and sort of start laddering it effectively from there onwards. Okay, so it's just the right ways of doing things. So wrong way, in my book at least, is this. Would avoid this, so try not to add in, unless it was a completely different setup that you may be trading in. But if it's related and the same currency, I would just suggest it's not the right way to do it. This way is fine, this way is certainly good, and this way is good. So there's plenty of other opportunities. It's just safeguarding your positions. Okay, enough about that. Let's have a quick look at the markets and where we're going. Okay, a bit late this morning in recording this. GDP figures already out. We're seeing a sell-off on the pound at the moment. The figures come out slightly less than expectation. Still looking at this daily 50 as a possibility in the bigger picture. And if we could, whilst we've got a weekly pivot above us, I'm of the view that where's the weekly pivot? It's untouched. There's quite a distance away from that now. It's sold off throughout most of this sort of relatively quieter week. You've got to remember it's a bank holiday week. It was a bank holiday week at the beginning, so traders off at the beginning, but it is school holidays in the UK, and this does often have an effect on the overall volumes and the market action. So it's a slightly weaker market quite often. We've got G7 and there's not a lot of other news going on, so reactions are quite lower and quite tricky to get into trade some days. Anyway, so we are certainly heading down at the moment. We had the indecision candle yesterday, spinning top, but it's a negative one at that, and we're just at the moment seeing ourselves sell off some more. Breaker yesterday's lows, well then it really, that's going to possibly find support into the 34 initially, but if it breaks that, I think we're on pretty clearly to head towards that 50 moving average. Likewise, if we do see a bit of a rally, with this 21 curling around at the top here and everything still pointing south, I think rallies are going to be difficult to push through this. I know we've tested the bands here and the 8 before, but it may, with the combination, if it was to run up quite quickly, may provide some more resistance there and see us continue to the downside. But as I say, I'm relatively bearish on the pound and the euro at the moment. Euro, for more obvious reasons here, it has sold off quite a bit, rallying up today a little bit at the moment. There is a bit of conflict because the 50 moving average is still pointing upwards here, but we haven't tested the upper bands on the dailies. I would like to see that as a possible sell point. So any rallies into that sort of level, I'd be looking if there's some good setup on the smaller time frames as well, looking at a sell point into that daily 8 area, upper band area on here. Okay, otherwise it looks relatively weak. Looking then at the dollar yen. Now this has gone into, I'm going to change pages here. We've now gone into the 2007 highs. It's just having a bit of a reaction from that. But each of these highs here, as I said to the guys yesterday, I think I said it in the week on the Monday update there are chances that we could break these, and there's probably stops sitting above them from people that are sitting here looking to be short. But overall, this monthly chart is suggesting possible continuation moves here at the moment. So it's erring towards the bullish side. Shorter term time frame or daily time frame, we may just be with these bigger wicks on the candle, may just get into a little bit of an exhaustion. It could do with coming probably down for a bit of a retracement. May look to buy into retracements into the 8 moving average, daily 8s there. If it does it early point next week, we'll just watch that. It's not a currency I've been trading a lot lately because we sat through so much chop here. It came off my radar effectively, but now it's sort of into a trend area, maybe possible retracement and then push back up. I'll be looking at the potential for that again. Sorry, click the wrong button there. Let's just click that button. Whoops. On that button, there we go. Just wanted that button to come up there. You can see we, from a RSI point of view, quite oversold up here. So there is the chance of any retracements up here coming up to test that. Okay, that's the dollar yen. Keep doing the wrong things here. And finally, the Aussie dollar. So the Aussie dollar sold off quite significantly. It does seem that one of the weaker currencies in a sense. It's probably following the yen in a sense, but the Asian slowdown is not really slowing down, not helping too much. Saying that, China, there's some reasonable figures come out in China the last few days, but it's still not sufficient. And I mean, the thing is, it's the lapse in time when there is any signs of slight change around in growth for things to actually sort of happen. So we're just seeing probably the potential for this to come back down towards these prior lows here. There were some analysts from the big city banks looking for 75 as a figure, and it could well at some point do that, but in the shorter term I'm really looking for it to come down to its monthly S1 area. Okay, that's it for me. News wise for the rest of the week, there's not significance out. We had the GDP estimate, second estimate. Don't normally see a lot of movement from that, but it did. It's unusually, it came out different to the normal. It normally comes out pretty much in line. Got the G7 meetings going on, so we could have more charts of action coming out of either today's and most likely tomorrow's, which is also running on tomorrow. The side of that, we today now got the US unemployment at 130, which is the weekly figures, which may create a bit more volatility as we get towards June when there's discussions of increasing rates. But all of these figures now in the US are starting to create a little bit more volatility. Looking forward to Friday, we've got the GDP and Canadian GDP figure, but it's a monthly figure, so it has less swing at 130. The weighting on it's less because it is a monthly figure. That's it really, so it's a relatively quiet week, continues, unless of course the G7 meeting gives us some shockers. Okay, that's it for me. Hope you have a great one. Bye for now.